Hey, it's Clay at claytrader.com. This will be my top 10 stocks as we head into Wednesday, April 27th. This will be a technical analysis breakdown. So if you're someone that uses charts within your trading, or maybe you're just interested in learning more about this tool and how it can be used to help make good decisions as a trader, this will be a video for you. Before I get to the watch list, I first want to personally invite you to get signed up for this free live online class that I'm offering here in a couple of days. So if you're liking what you see as I go through the video and you want to learn more about this tool, how it should be used, and why it's such a powerful tool to help build consistency as a trader, then certainly get signed up for the free class. If you're watching on YouTube, there's a link down in the description box. If you're watching at my site, there's an area right there on the webpage that you can click to get signed up. So again, if you like what you see, certainly get signed up for the free class. A couple of quick clarification points. First off, this number you see over here will be changing as I go through the video along with the candlestick. That's because the market is still open for a small amount of time. But I like to do these videos when the market is still open because sometimes we can capture some really late day action. But the market is close enough to being done where everything that I talk about will still be relevant as we head into Wednesday. And then also I'll be using the 30-minute time frame. So for you beginners out there, what that means is each one of these candlesticks, as they're called, represents 30 minutes worth of time. So stock number one, BRQS, and this will mean a bit more to those of you that have watched past watch list videos, but been talking about this one for a while now. And the big update here that needs to be made has to do with this red line here, which was their previous resistance, but you can see this morning got the breakout of that level and then made a very nice move. So from a very narrow standpoint, fantastic breakout today. But then from an overarching standpoint, the uptrend continues by putting in higher highs and higher lows. And, that's what it's all about from, again, an uptrend building perspective. So the first update that does need to be made comes about based on a foundational rule in charting, which states when levels of resistance are broken and closed above, you want to see them act as support. So 39 cents now, one of the newest areas of support. But assuming you care more so about just the general trend, then the kind of easiest way to just gauge the health of the overall trend is just to watch that purple line there, the 50-period moving average. And as long as the price stays above that line, as the line itself moves higher and higher, hence its name, a moving average, then overall, the big picture trend is completely bullish. As far as areas of resistance are concerned, key battleground now to watch moving forward, going to be right there at the 45-cent mark. Nothing fancy behind that logic other than the fact that that's just where the party finally stopped today, so keep a close eye on that. But overall, the uptrend continues. Next one, CYN, and just an absolute monster mover late day today. There was this area of resistance right here where the price had, been pretty stubborn around this $3 mark, but you can see mid-afternoon price came up there. Broke above it, kind of, slogged around that area, and then now as we watch is breaking out and knocking on the doors of potentially going to all-time highs here or not all-time highs, but the highest that it's been in several months here as I watch. And this, like I said, why I like to do the market still open, because let's see if this thing can actually break up through those highs here. And looking like 370 is going to be that key break. So if 370 falls, let's see if it can get any sort of momentum. But the first update, not update necessarily, but the first key level to watch for the very same reason was $3 was a key area. Oh, I missed it. There it went. Figures when the box is up there. But $3 is going to be that near-term level of support. And then overarching wise, as we just discussed, watch that purple line there, that 50-period moving average. And like I said, per its name, this line will continue to move itself higher and higher. So I like to call moving averages trend lines for lazy people, because if you don't feel like drawing yourself a trend line, well, just let this moving average, quote unquote, draw the trend line for you. And again, as long as the price stays above that level, then the overall trend is plenty bullish. As far as areas of resistance are concerned, as of right now, it's essentially in blue sky breakout territory. So you're going to have to use some kind of gut instincts in that regard. But that's always a good problem to have when you have price movements in blue sky breakout territory. But overall, nice breakout. As we're witnessing right now, the breakout continues. So let's see how much more momentum shows up on Wednesday. Next one, TSLA Tesla, and this will mean more to those of you that have watched past several videos, but I have talked about that green line over and over and over again, and it finally came into play in a very big way, and a good example of why stop losses are good, because it was completely logical for people to think that it could bounce off that level. I mean, it's done it so many times before, but there's also the lesson here that there are no guarantees, and for the people that did not honor the stop loss, did not have a stop loss, and thought, oh, it'll come back. Those people got absolutely crushed today. So that does bring about the first update, and this is just based that when levels of support are broken and closed below, they tend to act as resistance. So if there is any sort of, big epic type of bounce, right up there around the 973 mark is going to be that initial or that main level of resistance, but more so relevant levels from a resistance standpoint. Keep a close eye on that $900 mark. As far as areas of support are concerned, as you're seeing here, I have to squeeze down the chart here quite a bit because it's now been several months since the price was down around this level, with the next key overarching level of support being right down there around, what is that, $865. So $865, next key level of support. But yeah, Tesla got absolutely destroyed today. Next one, AMC, and another rough day here. Granted, it was a rough day for the general markets as a whole, but the level here that I talked about and came into play. So for anybody that is more bearish biased and either played puts or some shorts, I mean, that turned out to be a fantastic signal right there with that breakdown. But that also brings about the first key update. As I said, levels of support are broken, tend to act as resistance. But because this purple line right here, that 50-period moving average, has now moved down below that red line, it's still relevant, but it still pertains, just not that relevant. So what I'm going to do is actually adjust this level down because the newest near-term level of resistance is going to be right there at that $16 mark. So if the price does try to bounce at all, 16 will be that first key battleground. The next key level will be that purple line there, 50-period moving average, which I've talked about several times before. You can see, generally speaking, rejected it, rejected it, rejected it, rejected it, and then once again this morning, rejected it. So that's certainly a big thorn in the side of the chart right now. As far as levels of support are concerned, if this downwards move does continue, next key level to keep an eye on, going to be down there right at $15 and let's call it 20 cents. So keep a close eye on that. But overall, rough day for AMC with it putting in new lows and with the overall downtrend continuing to seemingly pick up that much more strength. Next one, EVOK, a very ugly looking chart. But as I know some of you know, I'm going to say next, but there can be opportunity in ugly. And what's nice about this one is at least you don't have to worry about being the sucker that buys the top. That's suffering from FOMO, fear of missing out. Those people are already buying up around this area of the chart. Now, that doesn't mean that it would for sure be a winning trade. I'm just saying that at least that worry has been alleviated from your mind. But this is definitely a very nasty looking chart. Certainly there's risk that comes with it. So if you're somebody that doesn't know what a stop loss is, struggles honoring stop losses, I mean, really, you shouldn't even be trading it at all, but definitely shouldn't be taking these sorts of situations. However, if this is just a temporary pullback before an overarching move back to the upside, then there could definitely be some nice potential here. Again, assuming you can honor risk, because that's going to be a key part of this. But an area here that I think a lot of people will be watching, rightfully so, is they're going to have that trend line in play right there, and they're going to wonder, okay, is that trend line representing some sort of reversal point? Now, there are no guarantees, but my point here is it plausible? Is it valid to think that if the price comes up here and breaks through that trend line, that break could create a nice little pop back to the upside? Yeah, that seems like a plausible thought process to have. Again, not guaranteed, but it seems to make sense. However, you got to also acknowledge that there is clearly a lot of downwards pressure that's showing up. So you don't want to get caught in something where it comes up here and then just rolls back over, and then you're sitting there, holding and hoping. So once again, risk management really matters. But if you do like to play this price range, if you like to play these sort of situations where the chart does look ugly, but it feels like it could all of a sudden kind of turn itself around, then this one at least belongs somewhere on your watch list. Next one here, ATER, and this is on the watch list for one reason alone, a very well-defined pattern. So I want to be clear, I'm not trying to impress you. I'm not trying to imply that this is some sort of great skill or that a great discovery. The exact opposite. I assure you, people around the world have noticed this pattern and have drawn it. And I say that because when a lot of people are watching the same thing, wondering the same thing, call it a self-fulfilling prophecy, call it whatever you want, it has the potential to create some very worthwhile movement. So the level hairs that stand out to me, top part of this pattern right here at $5.80. And then right here, you have this area of support. So let me change that to green to represent more so a bullish dynamic. And then maybe just to keep this all one color, make it easier to see. So again, we have a resistance there. We have our support there. We have the big momentum move right there. Let's put our golf hole down here to make it more visual. And this would be known as a bull pennant pattern. So if you like to play stocks down below the $10 mark, you like to play bull pennant patterns, then this one should certainly be on your watch list. Next one, LCID. I've not done this one for a long time, and I'm not quite sure if it's as popular as it once used to be, but certainly an interesting pattern here that I wanted to get drawn up because, really it's one of my, whoops. Come on now, there we go. And it's one of these patterns where, let me get this other. Now, I think some people would probably disagree with this pattern, and maybe I'm stretching, so I fully admit that. But this would be, let's just call it a poor man's falling wedge. And a falling wedge is actually a bullish pattern, whereas a rising wedge is a bullish pattern. But yeah, is a bearish pattern. Let me take a step back. As backwards as it sounds, as it clearly confused me, a falling wedge is bullish, a rising wedge is bearish. And right here we have a poor man's falling wedge. So it brings about the question, again, along the same logic, what we talked about, self-fulfilling prophecies, there are no guarantees. So I can't say that for sure guaranteed if the price breaks to the upside that this thing's going to, make a huge move. But does it at least make sense? Is it at least plausible to think that, okay, if it does push through there, that would be a pattern breakout, and that could create some nice upwards momentum, again, from a trading standpoint. So could there be some opportunity to trade it and have some wiggle room? In my mind, absolutely. Now, you could completely disagree with me, and that's great. That's fine. That shows me that you're an independent thinker, and that's fantastic. That's the goal here, right? Because there's no one-size-fits-all strategy. We got to figure out what works best for you and your personal risk tolerance. But in my mind, I'm seeing this, poor man's falling wedge. So if you like to play these sorts of patterns, or maybe you're like, no, that's not even a pattern, again, totally respect that. But in my mind, this is a very interesting situation, especially when you factor in the last 30 minutes, big volume, small little doji candle. So is that a leading indicator of maybe some sort of bounce to come? Let's see what happens. Next one, PLTR, a very popular one, and one where really I was not expecting to talk about in this way, but the last 30 minutes, again, brutal. What I thought I was going to be talking about was how you had this level of support right here, and moving forward, it was going to be, all right, let's see what happens with this support trend line. But like I said, as I speak right now, from the last time I was checking it out, the price is now breaking down below that level as we speak. And now really things transition to, okay, well, is this the start of something now even bigger to the downside? Now think about that question. In order for me to even ask that question, something needed to first happen in the first place. And what did happen was, well, the break to the downside. Now, if you're someone that plays puts, you like to short, then this isn't necessarily a bad thing. In fact, this is a very interesting situation to you. But if you're someone that likes to play longs, like to play bounces, then on your end, it's a very valid question of, yeah, but this could very well be a faulty breakdown. Maybe this is a false breakdown. It's trying to get people's hopes up, and then it's going to snap back up. Again, that's completely a plausible thought process to also have. So think about it. You're going to have shorts that could be right. Maybe this is the start of something much bigger to the downside. You're also going to have longs that could be right. Maybe this is just a false breakdown, and it quickly snaps itself around, which, again, to circle back, why risk management matters so much, because you never quite know. But the idea here is that this is a unique situation, and that's what a watch list is all about. Finding unique situations and then watching them, and then based on how they behave, potentially putting together a trade plan based off whatever your personal strategy actually is. And in my mind, very unique situation with the breakdown, with the, look at this volume, last 30 minutes, with the huge volume. So let's see what happens with this moving forward. Now, I put this one strategically, but for the opposite reason is I thought I was going to be talking very similarly to PLTR, and I still will be, but just for different reasons, because as you can see here, this one has also broken down through that trend line. So everything I just talked about pertains now. So I'll go through it again really quickly. If you're some sort of short, bearish bias trader, then yeah, it's plausible to think, hey, you know what, is this the start of something bigger to the downside? But if you're some sort of long-sided trader, plausible to think, well, I don't know, this could just be a fake breakdown. Maybe this thing gets ready to snap back to the upside. So somebody's going to be right, somebody's going to be wrong. But going back to the whole idea of unique situations, this is certainly a very unique situation here on AMD. Once again, a very popular stock out there. So definitely keep an eye on it. And let's see, is this truly the start of a much bigger breakdown? Or is this thing going to be one of these that where the bulls just say, hey, just kidding, and then snaps back upwards? Wednesday will certainly be very interesting. And then I wanted to end with NIO because this is just a very unique situation. So think about essentially all the stocks we just talked about, the big names, the Tesla, LCID, PLTR, AMD, all those ones, not the smaller price ones, because those ones are kind of detached from general markets. They were all what? They were all breaking down. They were hitting new lows. And then AMD today, it did not hit a new low. Now, it bounced off the low right there, but it by no means collapsed. Now, yes, you could say, well, Clay, it collapsed from where it's opened up. Kind of. It did go down. But again, think about general context of how bad the markets were today, of how a lot of those stocks were breaking down going into the close. And what was NIO doing? Essentially just chopping sideways. Now, does this mean anything? Does this mean that this is for sure the bottom and the price is going to bounce? Of course not. But you see at least a unique situation here where, interesting, why NIO behaved so much differently than a lot of other stocks out there. So is this some sort of bottom? Is this maybe some sort of leading indicator where there's going to be a tradable bounce to the upside? Again, no guarantees, but that's certainly a plausible thought process to have, at least in my mind, based on the observations of how the overall market worked. Maybe you think that's crazy. Maybe you think that it's not even a unique situation at all. And again, I respect your opinion for thinking independently, but in the spirit of what a watch list is, to me, this is a situation that's worth at least watching over the next couple of days. So let's see if it actually leads to anything or not. So that wraps up the top 10. Again, if you like what you see here and you want to learn more about this tool and why it's such a powerful and beneficial tool to help build consistency as a trader, then certainly get signed up for the free class later this week. Like I said, it'll be Thursday, April 28th at 7 p.m. Eastern time, so I hope to see you there. As far as these top 10 videos are concerned, if you enjoy this format, if you would like for me to continue to, put in the time and effort to make these videos, then please help me out with some basic feedback. Hit that like button, leave a simple comment, say hi, tell me what you traded today, tell me what you're watching for tomorrow. But those two things, by hitting the like button and leaving a simple comment, communicate to me that you enjoy. And as long as I know that you as viewers are enjoying, then I have no problem at all continuing to put in the required time and effort to structure these videos together for you. So again, if you like what you saw here, then certainly get signed up for that free class. Hopefully I'll see you later this week. Everybody take care. Have a good one.